Hello friends, let us continue with some practical problems on profit and loss appropriation account. In the last lecture also, I did one practical problem with you, and let's continue with those practical problems. Now, here is one problem with us. It says there are two partners A and B sharing profits and losses in the ratio of 3:2 with capitals of 4 lakh and 3 lakh respectively. Okay, so let us write down the facts side by side. So, it says that there are two partners, partner A and partner B. They are sharing the profits in the ratio of 3:2. Clear? And the capital is A's capital is 4 lakh and B's capital is 3 lakhs. So we have capital, A's capital is, let me see once again, A's is 4 lakhs. And B's capital is 3 lakhs. Okay, let's see further. Interest on capital is agreed at the rate of 5% per annum. We'll write down this. Interest on capital is at the rate of 5% per annum. Okay. Further, B is to be paid an annual salary of 30,000 which has not been withdrawn. Okay. It says that B is to be paid salary of 30,000 per year, not per month. Careful. Further, it says profit for the year ending 31st March 2016 prior to calculation of interest on capital, that is before taking into account the interest on capital, but after charging B salary. That means whatever the profit is given, that is 1,20,000, is after charging B salary. 1,20,000, the B's salary of 30,000 is already deducted from 1,20,000. Okay. So it says profit after paying salary, it is 1,20,000. Right? I have already told you that it is very important to read between the lines. Each and every line is very important. Read the question carefully because the figures will completely change. A provision of 5% of the profit is to be made in respect of commission to the manager. And it says prepare an account showing the appropriation of profit. What it says that 5% of the profit, 5% of profit is to be paid as manager's commission. Okay. So it says prepare profit and loss appropriation account. Now here this point is very important. One is profit after paying the salary is 1,20,000. So the profit before salary, what is? We'll say what will be the actual profit, I will say. What will be the actual profit? Actual profit will be 1,20,000 plus the salary of B, that is 30,000 a year, That means the firm has earned a profit of 1,50,000, and out of that 30,000 has been paid as salary to B. After that 1,20,000 are the profits left. Okay. Now the question says 5% of the profit is to be transferred to manager's commission. Now what is manager's commission? Whether it is an appropriation or it is a charge against profit. This manager commission, whether it is a charge or it is an appropriation, what it is. Now suppose you have a manager in your firm. You are paying him a salary or a commission. Suddenly your firm is into losses. Okay, but the manager is doing his duty. Okay, if he is doing his duty, then he must get his salary or commission, whatever it is. That means the firm is under an obligation to pay to the manager his salary or commission, whether the firm is earning the profits or not. Suppose there is a business running, it has 20 employees. It is paying salary to 20 employees. Okay. Now, these employees are not aware of the actual position of the business, that whether the business is into profits or into losses. They are working for the business. Now, if the employee is working for a business, it will definitely demand its salary on time. The business can't say that because we haven't earned the profits this year, we can't pay you salary. Take it next year. Why? Why an employee will work free of cost? He will say, okay, bye bye. I'm leaving your company. I'm going somewhere else where I will get the salary. He is a very good employee. The business will say, no, okay, wait, I will pay you salary. Don't worry. So that means it is an obligation for the firm to pay a manager's salary or commission who is working irrespective, unknowing of the actual position of the firm, that whether the firm is earning profits or not. Okay, so if the firm is under an obligation to pay, then it automatically becomes a charge and not an appropriation. So it is an item of profit and loss account. So let's start with, what we will do is, let's prepare first the profit and loss account. Because here we have the manager commission, which has no relation with partners at all. So let's first prepare the profit and loss account. Similar to P&L appropriation account. Formats are very important, keep in mind. Okay, here we have the credit side and here we have the debit side. We have particulars, amount, particulars and amount. Now, first of all, see what are the profits, actual profits that have been earned by the firm. We will say here by profits. Now what will be the profits? 1,20,000, that is given, but this 1,20,000 is after paying salary to B, so the actual profits will be plus 30,000. Actual profits are 1,50,000 because this 30,000 is an appropriation. Okay, so the profits transferred to P&L appropriation would have been 1,50,000. Out of that, 30,000 has been appropriated to B as salary. So that means the profits in the profit and loss account would have been 1,50,000. Okay, so now what in the P&L account we are going to pay the manager's commission to manager commission, that is 1,50,000 into 5 divided by 100, because it is 5%, that comes to 7,500. Okay, so now what we are left with will be transferred to profit and loss appropriation account. Now we will say to profit transferred to profit and loss appropriation account. What it is? 1,42,500. So this is our profit and loss account. Okay, so now next the question has asked us to prepare the profit and loss appropriation account. So let's prepare the profit and loss appropriation account now. Profit and loss appropriation account. You can prepare these formats side by side, note these down solutions. Here we have the credit side, we have the debit side, we have particulars, amount, okay. Now what is the profit we have in the profit and loss account? That is to be transferred to profit and loss appropriation account. This profit will be transferred here. We will write by profit and loss account 1,42,500. Okay. Now let's see about the profit and loss appropriation account. A and B sharing profits in the ratio of 3:2. Capital is 4 lakh, 3 lakh, interest at the rate of 5% to be paid. So let's pay them the interest first. What we will write here is to interest on capital. On A's capital, it is 4 lakh into 5 divided by 100. This comes to 20,000. And for B, it is 3 lakh into 5 by 100 comes to 15,000. So the total is 35,000. Now next it says the salary to be 30,000 to B's salary, that is 30,000. Now whatever is left, we are left with 77,500. Okay. Now what we are left is will be transferred to the partner's capital account to profit transferred to A's capital account and B's capital account. Okay, what is the total amount we have left with? 77,500. That is 1,42,500 minus 35,000 minus 30,000. Now A and B are sharing the profits in the ratio of 3:2. That is, we will divide this 77,500 in the ratio of 3:2. Now A will get 46,500 and B will get 31,000. So this is the P&L appropriation account 1,42,500, 1,42,500. Very simple, just one point of manager commission that was tricky in this question. The second point was the profits given were after appropriating the B salary of 30,000. So first we will calculate what are the actual profits earned by the firm, that is 1,50,000, and on that 5% is the manager's commission. It is a charge against profit, therefore we will charge it in profit and loss account and not profit and loss appropriation account. Then whatever the profits we are left with will be transferred to profit and loss appropriation account. Okay, so we have by P&L account 1,42,000. Out of that we will pay interest on capital to A and B at the rate of 5% on the respective capitals. We are paying B salary of 30,000, and whatever profit we are left with 77,500, out of that we are paying A and B in the ratio of 3:2. So A will get 46,500 and B will get 31,000. Okay, clear?